All right, ladies and gentlemen, let's go ahead and talk about AMC stock. What's happening today, what we can expect over the markets over the next couple of days or so. We'll break it all down for you. And as you know, AMC stock down 34.5%. It's hard out here for an ape, okay? Today is not the best day. Now, as we said in the last video, I think it's important to acknowledge and ultimately remember that there is no certainty that AMC is going to massively dilute shareholders. I've said it a couple times, and I'll probably say it some more in the future. We just don't know. AMC put out this open letter today that basically reiterated what I was at least expecting, that we're not going to see massive dilution, at least right away. AMC says if they choose to, not that they're going to raise capital, because now they don't need to as much as they previously did. Now, Michael Burry just shorted the markets worth $1.6 billion. Bought $890 million worth of SPY puts, $740 million worth of QQQ puts. This is 93% of Michael Burry's portfolio. 93% in these puts. 1.6 billion, 1.6 billies. Now, if you guys are unaware of who Michael Burry is or why this could be significant, potentially, well, let me explain exactly why. So, Michael Burry, during 2006, the end of 2006, the beginning of, I believe it was 05, the end of 05, 06, Michael Burry called out the problem and pointed this out, spotted it, was the first one to recognize it, literally in the whole entire world, that the great financial crisis was coming, that mortgages were going to fail because what the banks were doing is taking subprime borrowers, your dog, for an example, your newborn baby, that their name was on the deed to the house, and the banks were taking these BS loans, wrapping them up, bundling them together, and having the credit agencies stamp a A+ rating on them, or AAA. And then Michael Burry went through the actual data, the actual mortgages, and found out that they were not what they said they were. So eventually he knew it was going to crash. What did Michael Burry do? He put 100% of Scion's assets, or his fund at the time, assets into shorting something that had never been created before and never had been done. If you guys have seen the movie The Big Short, then this makes a lot of sense to you. But Michael Burry went to many different banks and he created credit default swaps on mortgage-backed securities. Nobody had ever done that because betting that mortgages were going to collapse was a very crazy bet at the time. And Michael Burry put all of the fund's money into that trade and sat on it for a good year and a half, and then finally the trade did ultimately work. In the movie, it shows the banks kind of hedging themselves first and then wanting to spot his contracts at the appropriate price. And if you guys have not seen that movie, definitely go ahead and check it out. But whenever Michael Burry does a trade this size, it's showing a lot of confidence in what he's doing. I can't recall any other time in history where Michael Burry, besides 2008, was 93% short in his portfolio. And these are puts. So if these go to zero, you have big problems. Okay, your fund is by far gone. So keep that in mind. I think that is something that happened today that people are starting to take notice of that is quite alarming if you just think about this logically. Now, we're going to have some events happening as well today, later on tonight, as well as tomorrow. And I want to run through it briefly for you. So it's going to be Japan data as well as Chinese data. So what you're going to get for Japan is at 7:50 p.m. today, Eastern Standard Time. You're going to get GDP growth annualized preliminary for Q2, GDP growth rate quarter over quarter, GDP price index year over year, capital expenditures, GDP external demand, GDP private consumption, all of this data coming out at 7:50. Now, Why this data it might be a little bit more important than it normally has been. Most of the time, people don't give a crap about what's happening in Japan or China or, for that matter. When things are going good, doesn't matter. Well, now you've started to see inflation picking up in Japan, China going through deflation and heading into a recession as we speak. So the markets today are concerned about the global markets, the global recession that could be taking place here shortly. And then at 10 p.m. today, Eastern Standard Time, you're going to get industrial production year over year, as well as retail sales year over year, and the unemployment rate for the month of July, all of this data for China. So this is what the futures, the pre-market is going to be reacting to. And then you're going to get earnings from Home Depot. That's important for the state of our economy, right? If Home Depot's not doing good, odds are a lot of people are not doing good out there. And it can usually be a bellwether per se on how the economy is doing. Now, tomorrow, you're going to get at 8:30 in the morning the inflation rate year over year for Canada. You're expecting that at 3.1%. Last month's reading was 2.8%. So there's, again, kind of feeling the base effects that we are feeling that's pushing inflation back up again. But retail sales month over month for the month of July, that's the big data point coming out tomorrow. For our markets, you're expecting 0.3. Last month's reading was 0.2. So you are expecting things to tick up a little bit. If they do not, well, boy, we have a problem. If they do fall or maybe even go into negative territory, that's not going to be good as far as right now. Maybe Michael Burry knows something. Maybe not. Who knows? But when you put all of this into context and the major catalyst that we have over the next 24 hours or so, it really makes you scratch your head to, is there something bigger coming? Now, the rest of the week is going to be important for retail earnings as well. Wednesday in pre-market, you have Target, Zim, JD.com, TJX. Wednesday and after hours, Cisco. Thursday pre-market, the big dog Walmart will be reporting earnings. And then John Deere Friday pre-market could also be important. So your consumers, that's the big story of this week. Depending how that goes, it's going to put pressure on the markets, which could in turn affect AMC stock. Now, specifically with AMC, again, I think it's very important for people to know there's no certainty of if we're going to get dilution or not, or I guess a better way to put it is how much dilution are we going to get? There is 0.0% clarity on that question, and we did not get any from Adam Aaron's letter to shareholders today as well. But it doesn't seem very advantageous to nuke the stock the second they have the chance to when the share price is low. You at least would want to see the stock go up before you sell stock, right? And I think that's something that could actually be a positive for AMC stock, the fact that everyone's expecting this massive dilution that might not ultimately come. Now, the biggest positive for AMC in particular is the fact that this trade is over for the hedge funds, institutions, and people that are short in AMC. There's no more trade left here. I mean, that's it. You either cover now or you take some losses as AMC does go higher. Now, the cost of borrow fees today are also insane, and when you put this into perspective, it's actually crazy. So the cost of borrow max is sitting at 956.41%. This is charged, divided by 365 days. That fee is charged every day. So you're a 2.5-3% fee every single day. So even with this 34% drop, if you've been short in AMC for a month, 2-3 months, depending on where the cost of borrow fees were at, you're still not making money on this trade. Now, I think given where we are, there's a greater chance that the stock actually goes higher rather than lower, because again, I think people are expecting the absolute worst as far as dilution. I think the markets are have priced in like 25, 35, 40, 50% dilution to AMC pretty instantaneously once the reverse split actually happens. And it is confirmed. August 24th is going to be the big day, in which you also want to keep in mind history shows that AMC stock has always seen its most aggressive rallies when AMC has actually raised capital, right? In January of 2021, in June of 2021. And all of these other rallies in here, these big rallies, were all to some degree based on AMC raising capital. So I don't know why this time would be any different, especially considering now AMC is profitable. This whole reverse split, what they're trying to do, just makes it so they can raise capital at some point in the future. Not that they necessarily need to raise capital right now, and I feel like that's the last thing Adam Aaron, or anyone that is with 8 management would want to do at a time where a lot of shareholders are really just pretty pissed off, and justifiably so. So yeah, those are kind of my thoughts. I've said it before, but I really want everyone to hear that is possible to hear it. Now, let's take a look at some of the other data as well. You have 27.88% short interest of free float, actually going up a little bit today. 143.94 million shares currently sold short. Cost bar average 707.38%. Again, cost bar max 956.5%. Cost bar minimum 332.5% as well. So some very, very, very large numbers over here. And that's obviously a problem for the hedge funds and institutions. Now, if you take a look at the option activity today as well, absolutely insane. Like this doesn't even make any sense. If one of you guys can explain this down below in the comment section to me why this would make sense, let me know. So you have seen 364 orders today from hedge funds and institutions. This is only from hedge funds and institutions. This is not from retail investors, okay? $91.81 million worth of options placed in AMC with a positive order value of 1%. After a 34% drop, why would you go crazy buying options, buying puts in AMC? Especially considering AMC actually seen a very nice bounce today, believe that or not, from the lows that we've seen in the beginning of trading at $3.18 per share. Been a very healthy bounce from that low, sitting at $3.47, almost $3.48 per share. You bounce about 25 cents or so, man. It doesn't even make sense to go into all of those puts. And that's probably a main driver of some of the shorting pressure that you are actually seeing today. Now, I think you are kind of in purgatory. We need to get more information, maybe how AMC plans to use this capital, or, what's coming next, right? Do shorts cover like the only logical thing there is to do, or do they continue to attack the stock? Well, we'll see. I think there's also a lot of that illegal activity that is also happening today as well, which happens basically every single day. And if some of that does stop, that could also be a pretty big factor to send the stock higher. It's almost like it did stop a little bit last week, and AMC stock did go through quite a decent little move higher right here. So we'll see what happens. Again, I keep saying we'll see what happens, we'll see what happens, we'll see what happens, because it's very uncertain, and we don't know exactly what's going to happen. It's not like we've ever went through this exact scenario, especially given the shorts look so vulnerable right now. Days to cover is around 8. Cost to borrow fees, like 900%. Short interest at 27.5%. If you include the options and if you include the options, things we can quantify, your short interest is 40-50% after today. If you think about the naked shorting that's been going on and some of the FTDs that need to be covered, which is a very large amount, I believe tomorrow you're going to see around 13 million FTDs that do come due. Let's go ahead and pull this up for tomorrow's going to be August 15th. You got 14.2 million FTDs cumulative that do come due. So all of this, how does that end? It ends in a short squeeze. No matter how long it takes, shorts ultimately have to cover. They have not covered on their short positions. But over the next 24 hours or so, things are going to be very volatile, so I will keep you up to date and informed. If you guys want to also come trade with us live in real time, maybe come hedge out your portfolios during times of uncertainty in the markets or when it is a good time to hedge, link down below in the description of this video. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.